Hey everyone, we're going to go ahead and get started. My name is Morgan Powell. I wanted to thank everybody for coming out tonight. I have a real estate team, and part of my team is with me tonight. We're just missing my mom. She is watching some of our kids tonight, but she's a great asset to our team. This is Alicia Jester. She joined our team last year. She does a ton of marketing, really specializes in buyers, goes above and beyond. And then Dolores Jameson has over 20 years of real estate experience. She's a go-getter. She shows more houses in the evenings than probably any other agent in town. We're really lucky to have her on our team. And then this is my sister, Madison Marcosi. She is not on my team, but she is a mortgage lender, and a big part of buying a house is the whole mortgage process. And we're going to go over the whole process tonight. If you have any questions, feel free to raise your hand. We can stop and go over your questions at any time or go over them at the end, whatever you want to do. The whole home buying process is not the same for everybody. And some people may get pre-approved right away. Some people may need to wait to get pre-approved. It's different for everybody, and every bank is different also. And so we're also going to go over the grants and lender initiatives and special programs available. So not every bank is going to be the right fit for you, but what we could do is try to help match you with the right bank based on where you're looking or what your job is or what your income is, those kinds of things. We can help you figure out the best fit for you. The biggest thing that we're going to talk about as far as grants is the $7,500 grant that's getting ready to come out in March, and Madison will go into detail on it. So yeah, here we go. When you're buying a house, the first thing that you really should do is, meet with a real estate agent to kind of figure out what it is you're looking for, what is your time frame, and figuring out the whole getting pre-approved process. And we kind of touched on that just a minute ago that, not every bank is going to be the right fit for you, and you may want to talk to a couple different banks. You don't want to talk to 100 banks because that'll could ding your credit every single time, but we could hopefully point you in the right direction of some mortgage lenders that can fit what you're looking for. So after you get pre-approved, you can go house shopping. But when you get pre-approved, a lot of times you'll get pre-approved for more money than you actually want to spend. So it's kind of good to go into the whole meeting with a mortgage lender with a budget in mind. If you tell them hey, I want my payment to be around X amount of dollars, they could tell you, okay, then this is what you should search for when you're buying a house. And they could tell you the purchase price that you should search for, that amount and under, and then they'll also be able to help you with anything else along the way. Anything to talk about getting pre-approved?
We'll go into more detail on further slides, but as far as factoring in the budget and things that you're looking for, when we first meet, I'll ask you, how much do you want to spend each month, or what's your cap? Now, every home is going to have a different estimated monthly payment because property taxes and home insurance will be different on every individual home, even if it's in the same price range. So if you have specific addresses in mind or a maximum monthly payment, that's a good thing to come into our first appointment with, so we know exactly kind of what direction to point you in.
So she won't always admit this, but she's always ready to work. And I think that that's really an important characteristic when you're picking a mortgage lender, because you may need a payment estimate on a Sunday afternoon or a Friday evening. And you may not want to write an offer on a house until you know what is that payment going to be on that, and that you can feel comfortable making that payment. Or you may see a house go online and you're like, oh my gosh, I need to get pre-approved right now. I found the right house. Well, she's ready to go at any time. So I think that's an important characteristic when you're looking for a mortgage lender. I would say look for one that's willing to work with you in the evenings or weekends if you need them.
Yep. So I'm with the mortgage company here in Salina, and we are not a bank. We do not have bank hours. Our office phone numbers are cell phone numbers. So if you call me and I don't answer, I'm probably feeding my kids. But I will call you back, or you can text me, you can email. We're always able to reach.
So before you buy, the biggest thing is meeting with a mortgage lender to determine how much you want to spend. and then saving for that down payment or understanding what grant programs are available, and we're getting ready to go over that with you. When you get pre-approved, they're going to check your credit, and so they're depending on what your credit score is will depend on what type of loan that you can do, and there can be ways to like increase your credit, and a mortgage lender can go over that with you, and then you get pre-approved for a home. Anything you want to say about that?
She touched on it a little bit earlier. Find the right lender that fits for you. Don't talk to everybody in town because everybody will pull your credit in order to pre-approve you. And hard inquiries on your credit report or pulls on your credit report can make your score go down. You do have a grace period for while you're shopping for your mortgage loan. It's about 30 days or a month long where you decide, maybe this person I spoke to already isn't the best fit for me. I want to shop around. You can still have your credit pulled without it affecting your score. So it's good to, if you're starting that home buying process, to make sure you talk to everybody you want to talk to within that approximate 30-day window, just to make sure you don't end up with duplicate hits on your credit score. So there's tons of different loan programs, and our most common loan program is conventional loan. Conventional loan is really the best one to pair with the first-time homebuyer grant money too. But there are other great loan programs out there and that have low down payment options. If you are a veteran and have VA benefits, there's no down payment required on that. So really, whatever is specific to your situation, we will help you get pre-qualified for that loan program. So you don't have to come into our appointment knowing which loan you want to have from the start. We'll take all of your information and figure out which of these programs do you qualify for and which one suits your needs. They each have their own down payment requirements or PMI requirements. PMI is an acronym we'll use quite a bit. It's private mortgage insurance. This is an extra dollar amount on your monthly payment for anyone who starts without 20% down. There are loan programs that do not require PMI, like VA, like USDA. That would be a rural loan. But in general, PMI is something that you will have as part of your monthly payment until you get to that 20% threshold.
So an FHA loan is a government-backed loan, and so if you are doing a FHA loan, you could have a little bit lower of a credit score or a little bit higher of a debt-to-income ratio. But if you're doing FHA, we've got to, first of all, state what type of program you're doing, what type of loan program on the offer when you make one. So if you're doing FHA, we have to state up front to the seller, like, hey, buyer's doing FHA, and the seller has to agree to participate in that program. So if you're doing an FHA loan, the house has to pass in order to go FHA. Most of the time, it's pretty nitpicky stuff like chipping and peeling paint. That's a big one for them. Handrails is a big one. GFCI outlets within 6 feet of a water source. The little pipe that comes off the hot water heater, that's like a pressure release valve. Those are all big things for FHA. But sometimes sellers just want to sell as is and don't want to mess with that. So if you see like a foreclosure or if you see as is, sometimes FHA will not work for those. VA is also a government-backed loan, and so there's a lot of times like it's got to pass to like no chipping and peeling paint, GFCI outlets, those types of things. On a FHA or VA loan, a seller could pay more of your closing costs than on a conventional loan. If you came to me and said, hey, I want to buy a house in the country, or I want to buy a house in Bennington or Lindsborg or Minneapolis, basically a small community or in the country, then a USDA loan may be a good fit for you, because that is a type of loan that you could get into a house with no money down. Those loans are to help populate rural communities.
And another reason to get pre-approved ahead of time and make sure you know which loan program you're going with is because the FHA loan, the VA loan, they have different appraisers than our conventional loan programs. So it's sometimes more difficult to get through the loan process. It takes more time, just more a waiting period for the clerical side of things. Yes?
It's a USDA loan. Is that only for buying, or can you use it if you want to build in the country? Or is that totally separate?
I think you can build in the country with it. You'd probably be better doing a construction loan.
Yeah, and we can get into more detail on, there's special loan programs like construction loans or like doctor loans. But usually with a USDA loan, you're looking at existing structures that you are purchasing. It'll be difficult to convince a bank to lend on a new construction with 0% down. Generally, if you're starting with the ground, that's a riskier bet for a bank. So having a home existing is what they are generally used for.
So, and another thing to think about, like when you're getting pre-approved, you need to be having the conversation with your mortgage lender, like how quickly could you close me? Because like conventional loans, like sometimes those can be closed in like 2 weeks, sometimes 30 days, but sometimes FHA, VA, USDA can take longer. And so it's like unrealistic for you to go write a 2-week closing on a contract if you really need like 45, 60, 90 days to close. So that's something to like be thinking about in advance.
And in general, a closing typically takes 30 to 45 days. So if you know you're wanting to time your home purchase with the ending of your existing rental lease, you may want to take that into consideration. Start looking, 60 to 45 days before you want to be out of the house, or more, just to give yourself enough time. You can't know that you're leaving your rental in 2 weeks and expect to buy a home in that short of a time period.
Can you go over when the first payment is due?
So the first payment is usually due 2 months after you close. There are some specifics to that, but as a general rule of thumb, if you close after the 4th day of the month, your payment will not be due until 2 months later. So what are we now? March is coming up. If you close on March 4th or 5th, you will not have a payment until May. So that kind of gives you a little bit of a grace period. You just wrote your check for the down payment and the closing costs, and these funds are all leaving your account at the point of your closing, and you purchase this house. You have a little bit of a window to start saving up again before your first payment is due.
So the Kansas Home Partnership is one of the grants available. This is a grant through Bank Midwest, Union Home Mortgage out of Kansas City. A couple different banks offer this. It covers up to 5% of the purchase price. A reason why this one can be popular is the income max on this one is higher than a lot of the other grants. So typically when you're buying a house, they count all the income in the house. So this one has a higher income max, so it's 108. So if you use that grant of up to 5% of the purchase price and have the seller pay part of your closing costs, you may not have to put any money down at all if you did that Kansas Home Partnership. Madison is going to talk to you about the HSP grant.
So the HSP grant, it's coming out here in about a week and a half, and this is a $7,500 grant. You can use those funds towards your down payment or closing costs or combination of the two. And it comes out each year, the first week in March, but it's first come, first serve, and once all the funds are gone, they're gone for the year. Typically, this will last us probably through June, maybe July of this year, but right now is a good time if you're wanting to buy to really get your ducks in a row, get pre-approved, start looking at homes, because this money will not last long. Each bank has a limited number of these grant programs that they can do each year. So, the sooner that you find a house, the more likely it is that you will be one of those people to receive the funds. This has credit score requirements and income requirements. We take a look at all of the collective income for your household. Each county has a different income max requirement. Salina's max for Saline County for 1 to 4 person household is just over $62,000, and it's higher if you have more than 4 people in the house. But we have to take all sources of income. So if you receive child support or disability in addition to your earned income from your employment, we would have to take that into consideration.
Or overtime.
Or bonuses, or seasonal work if you pick up shifts, during harvest season or something like that. We have to take all income for the household into consideration on your application. So if you know that you think you would be a good fit for the grant, it's good to come to, your first meeting or when we're first talking about getting pre-approved with your pay stub. Sometimes it's hard to locate your most recent one or track it down through your HR. So get a hold of your pay stub so that you have it so we can know right away if you fit within their income requirements. And yeah.
What kind of credit score would an average person have or need for the HSP?
So for that program, it has to be a conventional loan through our local investors. So generally a conventional loan will be somewhere around the 680 credit score, sometimes lower, sometimes 660, but there's no exact science to the minimum credit score. If you have, let's say, a 660 and you've got a 401k account in addition to your regular checking and savings, that could be a good sales point for the bank for you to be a conventional loan rather than waiting until you have a 680 credit score, because you have other assets that show that you are a good financially savvy person.
Madison had this flyer made for you guys, so it's like on your seat area. And it just goes over that grant kind of more in detail.
Yeah.
So it has her number on there if you guys want to text or call any questions.
Yeah. Okay, so we've sort of talked about each of these items so far, but if you are shopping around, figuring out which lender works, best for your situation, figure out what kind of loan programs they offer or if they offer any grants. Not everyone is eligible to offer grants to their customers, especially, a hot advertiser right now on cable TVs like Rocket Mortgage and some of those other online lenders. They are not going to have access to Kansas grants, something more local to us. You'll need to go through a local lender to find more of those opportunities. I'm sure any lender would do this, but especially when you get pre-qualified through me, I'm going to figure out which loan programs you qualify for and any grants. You don't have to specifically say, I would like to be a grant candidate, because if you qualify, I will let you know. We always take that into consideration, trying to figure out of all of your specific information what fits best for you. Estimated closing costs can change pretty drastically depending on the sales price of the home that you're looking at. Usually within the Salina area, closing costs are usually between $4,000 and $5,000, just as a general average number. These are not all fees. That is a kind of a negative term, is closing costs, but a lot of what you're paying in those closing costs are setting up your home insurance for the first year that you're in the house. You're setting up property taxes to be paid to make sure that you have enough funds set aside to pay the property taxes. So other things than just fees will go into your closing costs. We have another slide coming up, but title insurance fees are factored into that. Mortgage recording fees, administrative.
Flood certification.
Credit report.
Home inspections.
Yep, home inspections, and I think you'll go into that in more detail, but some of these items like home inspections are optional but recommended. So just as a budgeting tool, I would recommend, just planning for $4,000 to $5,000 depending on your price range. It may be less, it may be more, and usually depending on, how many offers people are receiving or what kind of loan program you have, usually your realtor can help negotiate to have the seller cover some of your closing costs for you. So that's a good way to get into a home with little funds out of your pocket. If you are a grant applicant and receiving the $7,500, you can put, the majority of that towards your down payment, a small portion of it towards your closing costs, and have the seller pay the rest of it for you.
And you could get into a house for less than you can get into a rental.
Yeah.
Cool. So we kind of just made a list of some mortgage lenders, I mean, there's tons of mortgage lenders to work with. I mean, we work with more than just these 4, but here's just like a quick glance of some that we like working with because they like respond very quickly and they're great to deal with. So.
So we mentioned the pay stubs. When you're ready to apply for the loan, make sure you've got documentation ready and on hand of your assets and your income source and other things that may seem intrusive but we also need for the loan process would be if you have been divorced, we would need the divorce decree and property settlement statement. This is just to make sure that you are not obligated to pay child support, or if you receive child support, can we use this as an income source for you? Things like that. Student loans are a big one right now. Most student loans are still deferred, so you probably don't have any current payment on that, but it's most likely active through your credit report. So that's not something you would need to bring to our table just yet. You would need a government ID, so like a driver's license to prove that you are who you say you are, in addition to 2 years of where you've lived, 2 years of your employment. That becomes another potential issue in the underwriting side. If you have a new job every month, that may hinder your ability to buy a home. There's always ways to explain job changes, but probably not a good idea to start looking for a new job in the middle of your job search. We also have a slide coming up talking about things not to do during the home search, but those are big ones. Make sure you have access to your income documentation and asset documentation. Another touching point on assets, if you don't have your own funds to use, but you have a parent or a grandparent, a family relative willing to give you the funds for your home purchase, we can use that as a gift. We would have a list of documentation to make sure that it's documented correctly, but your family members can write you a check. We get a bank statement from them, a bank statement from you, and show the funds moving into your account, and now you can use those funds for your transaction.
That's the biggest key right there, is you can't just have a bunch of cash at your house and then take it to your closing and try to use that. Like, the money has to be sourced. Like, they have to be able to trace it where it came from.
Yep. There's a lot of red tape when it comes to buying homes, because that could lead to several opportunities for money laundering. So cash, I know cash is a real asset and a lot of people have cash on hand, but if you want to include any cash that you have as part of your home loan, you need to get that documented, you need it in the bank. That way we can make sure that all sources of funds entering this transaction are from a clean, legal source, and that there's no funny business going on with where it came from, because you could turn around and sell that house and now have a bunch of clean money. So if you've seen like Ozarks or something like that, that's essentially what they're looking for when they're asking for all of the asset documentation red tape. So
And then also, like, on 401ks, like, money can be pulled out of there for down payments or closing costs.
yeah, generally your 401k will let you pull up to $10,000 out for the purchase of your first home. Every 401k program is different. You may have to pay taxes or penalty fees on that, or your 401k provider may not allow it at all. Everybody's going to have a different setup for it, but as a general rule of thumb, usually if it's for your first purchase, you can pull up to $10,000 out.
Okay, so house hunting, and we did put a form on your table, and Alicia will go over that pretty soon. But the biggest thing is, a lot of times buyers come to us and maybe they are not realistic of what they're looking for, and so Alicia can kind of go over the form kind of more. But sometimes you got to decide, like, what is your deal breaker and what are your negotiables.
So on everybody's table area, there's a document that says house wants and needs list. There's also one in the book, but this one we'd like for you to leave with us so that if you are actively looking and considering buying a home, we can help hunt for you. Sometimes we know about things a little quicker in the community, and we can do a lot of the legwork for you. So,
And we're going to do a drawing for anybody that fills this
Yes.
out. So that's kind of it.
I'm
Okay,
getting
sorry.
there. So at the top, and we know you already signed it at the front desk over there, but at the top there's name, email, phone number, best time of day for us to reach you if we do find a property that you might be interested in, because some of you may not work the same hours as us, so we want to make sure we're mindful of that. But on here it talks about different types of homes, like are you looking for a townhome, are you looking for single family home, do you want something that's move-in ready versus something that maybe requires a little bit of work. So those are all kinds of things to think about too while you're house hunting. How many bedrooms you want, garages, all of that. So if you fill this out, down at the bottom it'll ask if you're currently working with an agent, if you're working with a lender, and if you're not, would you like us to recommend a lender for you? We can also recommend lots of different things. If you currently own and you're thinking of buying something new, in the back of your books there's like a vendor checklist. So we can help refer you to some people that can help you with that stuff. But when you leave today, if you want to leave this like face down on your desks, and we'll pick them up, whoever fills these out and leaves them, we have a gift card. I
Yep.
don't even know how much.
A $25 Mocha's gift card.
So she couldn't charge that. So
So my biggest tip though on searching for a house is being like quick, like when a house goes on the market, you need to be out seeing it quickly. And my recommendation is not to just call every single listing agent. It's in your best interest to have a buyer's agent. We could be your buyer's agent or any other agent, but it's in your best interest to have somebody looking out for your best interest, because we get paid by the seller. You guys don't pay a buyer's agent. And the other reason why I said it's important to be quick is because there's lots of buyers. You can't just wait till Saturdays to shop for houses. If a house comes to the market on Tuesday afternoon, you need to be out there seeing it Tuesday evening or Wednesday morning, and that is why I have a team. And so we are out there very quickly showing houses if the right house hits the market, because you don't know if it's the right one until you go inside. And if you can't make it there, Alicia's really good at taking videos, and we send them to people. So.
And if you're vigilant at looking at Zillow or Realtor.com or those things, those are delayed. So they'll be able to tell you what's actually coming up and what's active right now. So let them do the due diligence for you.
Another house hunting tip that I have is a lot of people are asking me about foreclosures and pre-foreclosures. Right now, there's no foreclosures on the market in Salina. Foreclosures really haven't happened very much in the last couple of years because of COVID and people not having to pay back or because of forbearance and that kind of thing. But we're starting to see more people getting ready to probably go into foreclosure, like the ones that didn't sell when the market was really high. And so that's something that could happen, but if it says auction online, you probably don't want to get involved with it as a first-time buyer, because most of the time you can't go inside. Sometimes you don't know if you're getting clear title. Like, I buy a lot of houses, I invest in real estate, and I do not mess with those because I want to know that I'm getting clear title. And we'll talk about title and all that soon. Yeah. So making an offer. When we're helping buyers make offers, I'm always asking the listing agent, hey, do you have any other offers? What's the closing date that the seller's wanting? What's important to the seller? Like, are they wanting to leave their kitchen appliances? Are they wanting to take them with them? Like, what is important? Because if you can, not worry about a refrigerator that the seller wants to take with them, or close on the date that the seller wants, or give them a little bit of extra time to get out of the house, sometimes that can mean all the world to the seller and help you win your offer. If there is multiple offers, it is very important to put your best foot forward, especially in this market. Right now, we're seeing between 50 and 60 houses on the market on any given day. And so like a healthy, balanced market in Salina should have 150 houses. So we are still in a seller's market. And I expect that the houses will start going even faster in March when this grant money comes out. I talked about you could, if the house is vacant, you could do like a shorter closing time if you're able to do that. And if you are, want to put down more earnest money, we haven't really talked about earnest money yet, but earnest money is the money that you put down on the house to show your good faith. Typically, about $1,000. Sometimes people will do $500, but typically we've been seeing $1,000. And that $1,000 just shows good faith. The money does get cashed. It sits at the title company. Sometimes it takes a couple days for that money to actually get cashed. And then if you walk away, during inspections, because of inspections, you can get your earnest money back. But if you just decide that you're gonna not buy that house, then that's a default and you lose your earnest money.
If earnest money is a new term to you, it's good to expect it and to kind of get more familiar with that term, because if you find this house you like, you're writing your offer, and then Morgan asks you for $1,000 check, you might start to panic. So, go in knowing that you need to have $500 or $1,000, depending on the price range of the home and what the seller expects, ready to come out of your account in the form of documentable funds. We're coming back to that a lot, but make sure it's your money that you are using for your transaction for the earnest money. Don't get, your mom or your boss or your best friend to give you the funds for that, or don't hand them cash. We need to make sure it's documentable money. And one other thing to know that those funds are being used towards your transaction. They're just being held for you in the short term. So when the closing day comes, that's being factored into you already having those funds forward for you.
So if we are your designated buyer's agent and we have a buyer's agency signed with you, we can pull comps for you and tell you what we think you should offer on the house if you want us to do that. And we haven't really talked about buyer's agency yet, but that's a form that you guys would sign with us or another real estate agent, saying that we are your designated buyer's agent and we are working in your best interest and only in your best interest, not in the interest of the seller. Oh, and some agents will put fees on there. We don't put extra fees on ours, so it's really important to look at page 2 of the buyer's agency to see if they put extra fees on there, because we get paid by the seller. So. Okay. You want to talk about this one?
You can start it.
Okay, so once you're under contract, then you're going to get a message from me or your other agent saying, hey, it's time to put your earnest money in escrow. And they'll say how much the check needs to be made for, which the title company is, and where it needs to go. So you can either drop it off at the title company or you can mail it. It just needs to be within 5 days of the contract being signed. So if you're going to mail it, do it the first day you sign the contract, because sometimes the mail could take a while. Then the next thing we do is we schedule a home inspection. So I usually send out a video explaining home inspections. So the top 3 most common home inspections is a whole home, a radon, and a termite. A whole home inspection kind of covers everything from the roof down to the foundation. But if there's something very specific on the house that you want looked at, like fireplace or a sprinkler system, then we should chat about that, because not all the times whole home inspectors don't always cover those things. Also, if you want to do a whole home inspection, it's a great way to save money versus hiring all these individual inspectors like HVAC, plumbers, electricians to come out and see things. However, if you're going to go with a whole home inspector, do not wait until the end of your inspection period to do that, because a lot of times a whole home inspector will say, well, I recommend that you get a licensed roofer out or a licensed electrician or a licensed HVAC guy. Usually they have some kind of recommendation for you to get somebody else out there, and so we need to allow enough time for that to happen. Typical inspection periods that we negotiate are anywhere from 10 days to 10 business days. So it's very important that we stay in touch and we stay on that deadline. When we go under contract with our buyers, we are sending out a timeline for all of our buyers, and it syncs with their phones, and they get email reminders like, okay, this is when your earnest money is due. This is when your home inspection is. This is when your walkthrough is, and we go through all of these steps. When you're doing a whole home inspection, it is my recommendation that you get there to the last 30 minutes of the home inspection, because it makes way more sense to walk around the house with the home inspector to go over the report than it does to get this 60-page report in your email, and then you're like, what is he talking about? And then, because it is their job to nitpick the house, and sometimes the reports can kind of be scary, and so it makes a lot more sense when you go through the house with the home inspector. And myself or one of the agents is always there at the home inspection summary to go over that.
In each of the inspections, whole home, termite, and radon, they all cost. There's fees to these. Don't let that be a reason to persuade you not to do them, because if, it could really save you. If these inspectors find something really wrong with the house, then, maybe you don't want to pursue that house anymore. Or maybe you want your buyer's agent to renegotiate your contract to get them to fix these things or to credit you funds for these things. It could really save you in the end by having done this step. A lot of the home inspectors will offer you a small discount on their fee if you pay them at the point of service rather than waiting until your closing date. So your lender is still going to show, most likely, an estimate for this whole home inspection or radon or pest, and don't let that scare you that, oh, I've already paid for this, now I'm being double charged. Anything that you've already paid for out of pocket or didn't do will drop off before closing. It's just there as a placeholder to make sure that you are thinking of these as total fees and your closing costs.
Yes, and sometimes there'll be times where I'm like, there's big trees here. I would suggest that you do a plumbing, like a sewer inspection, and check the sewer line to make sure that it's not collapsed or not full of tree roots. It just kind of depends on the house, and if it's in the country, then sometimes we got to test the water and we got to test the septic. There's just, every house is different, and that's why you should have a buyer's agent telling you what home inspections they think you should do, and helping you get those set up. And so we kind of help you navigate that whole process. There is multiple home inspectors, and we can send you information on all of them. Then you can Google search and decide which one best fits you, and then we can help arrange those for you.
So what not to do during the home buying process? Really anything major involving your finances, whether it's on the asset side of things, your debt, or your income, don't do it, or talk to your lender first, just to be safe. So do not buy or lease a car or any other major purchase during this transaction period. When we first receive your application for the pre-approval, that's a snapshot at that point in time of how your finances look. If you start to make changes, we don't know about everything that's happening, and maybe with your new car purchase, you no longer qualify to buy a house. So those are things that we need to be involved in the conversation, but it's easiest just to wait. Get in your house first before you make those major purchases or major financing. Other than a large purchase like a car, a really common thing to see is you go out to Ashley's and you pick out an entire store full of new furniture for this new house that you're about to buy. Well, this is new debt. If you're using your assets that we are planning on using for the transaction, that lowers, how much money you have available. If you're getting a credit card through Ashley's to finance this for you, that's more debt for your debt to income ratio. So both of those things can count against you in the home buying process. It's best to just let everything stay the same during the transaction period, close on your home, and then go do whatever major purchase you've been waiting for. Make sure you pay all your bills on time. If you're worried about that check that you have to write at closing and you're not sure you have enough funds to make all your payments that month, eat ramen or figure it out. Don't miss your payment. If you miss a payment, it could drastically change your credit score and make you no longer qualify for the home. Don't move money around. This is a big thing because you don't think about it as hurting your situation because it's your funds in your separate bank accounts. But if you're moving money from, let's say, Sunflower to U.S. Bank or back and forth, then we need probably 4 times the amount of bank statements in the file just to make sure that this money is really yours and it came from a legitimate source. So let your funds lie where they're at. Don't start moving stuff around. Don't open a new bank account. Even if you know that you plan on changing in the future, just keep everything as is at the point of your pre-approval and on. You want me to do this or you want to?
Do you want to do this one?
Go ahead.
It doesn't matter.
You're
Okay.
fine.
Okay. Final steps before closing. So the lender is going to ask for, who is your homeowner's insurance, because they're going to need a copy of that for their file, and they're going to need to know like what the amount is. The closing disclosure, she will send you a closing disclosure, or your mortgage lender, whoever, to kind of go over like all the numbers before closing, so like what is your cash to close, what is your payment, all of those things.
Mhm.
And then my favorite part, and one of the most important parts, is doing a final walkthrough. And I don't like doing it super early. I like to do it like the day before or like the morning of, because I want to make sure that the sellers got everything moved out of the house, that they didn't damage the house when they moved, that a pipe didn't burst, that they didn't walk off with the appliances that were supposed to stay, those kinds of things. So it's very important to do a final walkthrough and to do it very close to closing.
So homeowners insurance, this will be in what they call an escrow account. Your insurance and your taxes, and it's the escrow account. It's part of your monthly payment. Maddie will call you and ask you for a quote from your insurance company. Obviously, probably everybody has car insurance, so maybe start there and talk to them about bundling your car with your house insurance. Also, you can definitely call any other insurance company, local or online. I guess
You want to go over the policy rates and stuff? So, like, policies are different for every house. So, like, older houses usually cost more to insure than, like, a brand new house. And it also is based on, like, what your deductible is, So, like, if you have a high deductible, it could be, a little bit less, for you out of pocket right now, but...
And insurance agents will pull, when you're asking for quotes from them, they'll pull some of your basic information, or they'll ask you to provide it for them, similar to what we need for a pre-approval. And this way they can check what they call your insurance score. I believe it's similar to like your credit score, but on the insurance side of things. So if you are notorious for speeding tickets or have had past claims and things that are still following you on your insurance record, this could make your home insurance cost more from an insurance standpoint. They see you as a riskier, insurable person. So it doesn't mean that they won't insure you. It just means that your premium may be higher than others. So when you first start looking at homes and we have, an idea of your estimated monthly payment, within that monthly payment, we're estimating your home insurance and your taxes just on a general scale of what is standard for your price range of home or for Salina. A good thing to let your lender know would be, hey, I might not be the best insured person because I know that I wrecked my car last year and I had 2 speeding tickets the year before that. Those things could affect your insurance, which would make your payment go up, which would make your debt to income go up. So the more information that you can provide your lender on just your full financial picture is best for making sure we're pointing you in the right direction for monthly payment.
Good.
Title insurance. This is another item that's included as part of your closing costs. So title insurance is not the same thing as home insurance. This is protecting the bank and yourself to make sure that you actually have a right to own this home. So a good way to think of it would be, if you're deciding to purchase this house and you move in, you live there, and somebody knocks on the door and says, this was my grandpa's house and he left it to me. That would be an issue with the chain of title. But you have title insurance. You bought that as part of your closing, so you know that you have a right to the house. This person's grandson, granddaughter does not have a right to the house. So this is to protect you, to make sure that you're not buying something that is not really theirs to sell. And on another standpoint of the title insurance, it's to protect the bank, because they're going to make sure that you don't secretly owe money to people. You're not behind on back child support or tax liens, things that could attach themselves to this property to make it to where somebody else has the ability to take the home rather than the bank if you were to stop making your payments. So it's just to protect everybody involved in the transaction.
So on the day of closing, you do your final walkthrough, then you meet with your mortgage lender. That typically takes, or mortgage lender or the title company, it's different sometimes. Typically takes anywhere from like 30 to 40 minutes.
Or 15 if you're closing with me.
Yeah.
You don't have a lot of questions.
Yeah, and then it's yours. So closing day is pretty quick.
At the point of closing, you'll sign a ton of paper, and you will give us your funds for your closing. So either a check or certified funds, cashier's check, and you'll know the dollar amount that you need to bring to the table at least 3 business days prior to your closing, because that's required on the closing disclosure that you'll receive. You'll already know what your monthly payment is and all of the details specific to you in the transaction. You'll know before showing up. The act of closing is really just sitting down and making it official. You sign your name 50 times and then you get the keys. Make sure you bring your driver's license or other government ID, passport, whatever, to the closing. And we generally already have your home insurance information documented through your agent, but your lender may ask you to bring specific items to the closing that they're still missing. If they were waiting for that one last pay stub from yesterday, bring that to closing. Any remaining items that they need to clear out the underwriting file, they'll ask you for. But generally, just bring your funds to close and your ID to show that you are the same person signing.
So we also have this fun-colored paper in front of you. And so there's even more grants and lender initiatives and things available that you could take advantage of just besides the 2 grants we talked about. Oh, you don't have one? Oh, do you have?
No,
Oh.
I was wondering, can you take advantage of more than one of those at the same time, or do you have to just pick one?
So,
Do you want me to do that?
yeah.
Okay, so some of the grants are combinable. One of the grant programs that is available in Kansas has a very strict income limit for the funds. It's around $44,000 for this year's income limit, and that's for the total household income. If you qualify for that, you are more than likely going to also qualify for the $7,500 program. So we can combine those grants together if you qualify for both. But it really depends on first come, first serve too. You may on paper qualify for both, but maybe one of the funds have run out. So it just depends what's available at that time.
So on the left-hand side, it says income of $44,000 or less. So the Kansas Home Partnership, that was the grant she was just talking about. So that one, could cover up to 20% of your down payment. So the max income on that one is the $44,000. However, on that one, there's more guidelines for the house to have to pass. So it has to get through your regular inspections, then the appraisal, and then the first-time home buyer guy has to come to town and
There's
check it out.
one guy for the state of Kansas, so this
Yeah.
can make your transaction take a little longer.
Yeah, so this one can't really be done in 30 days usually. We need some more time to get this guy out here, and then we have to fix that because he's always got to find something. So then we have to fix the items, and then we have to bring him back out or get him to look at a picture and approve it, and so it just takes some time.
There's a lot more hoops to jump through on that program, but they are giving a lot more funds towards your transaction, and that's also why they always have funds available. So if you make under that $44,000 limit and also meet, their XYZ criteria, then jumping through the hoops of the guy from Topeka coming out and back may be worth it for you because they're putting a big chunk of funds down. And I guess another thing we didn't talk about is each of these grant programs has their own retention period. So the $7,500 one is a 5-year period where if you live in the home and you don't sell it, you don't rent it out, that 5 years is the funds are yours. Now, if you live in the home for 2 years and go to sell your home, a portion of those funds would go back to the program to fund future programs. So that's a 5-year one. The one that Morgan was just discussing with the guy coming out from Topeka and them giving up to 20% down for your down payment, that has a 10-year program. So each of these have different requirements, and we don't expect you to remember all the details on each one of them. The programs that you qualify for will make sure that you have an understanding of what you're getting into for the purchase.
The Rosebud program would be for like somebody that wants to buy in Salina but doesn't qualify for one of these grants. Maybe the credit score, maybe debt to income doesn't quite work for one of the grants. That one is a no money down program. That is through like Click and Close Mortgage here in Salina. We could help you connect to them. Sunflower Bank has a lender credit for people that make under, I think it's 54 or something. It's something like that. And they'll pay up to 5% of your down payment or closing costs. But then they also have this other thing, part 2, is if the house falls in a certain area, then that could increase the amount of money that they help you with. Madison talked about the HSP grant, and then it kind of just goes down from there. So there, the income of 62.8, you could do the HSP, you could do the Rosebud, you could do the Kansas Housing Resource if you had enough people, or if you made 108,000 or less. We talked about that at the beginning. Any questions on this sheet? It's kind of
What's the teacher, nurse, first responder? How does that work?
So we've been running a program recently where if you are a teacher, nurse, firefighter, police officer, depending on your sales price, we'll either credit your closing costs $500 or $750, and that's just, we take it off of the amount due from your closing at the point of closing because you are a frontline leader in Salina. So it's more of just giving back to the community. And I know we've talked a lot on the grants and the grant specifics, and if you're sitting here knowing that you make more than these limits and you do not qualify for these, don't let that steer you away from looking into the steps to buy a home, because the lowest down payment option, if you're not a veteran with 0% down or anything like that, would be 3%. So 3% of $100,000 is $3,000. If you know that when you file your taxes each year, you get a check back for a couple thousand, maybe that's making your way towards having the funds available to use to purchase a home. So
we covered a lot. We want to try to keep it at an hour, so we'll be wrapping this up. But if you guys have any questions, feel free to ask us. We'd love to help.